Kevin O'Leary looks straight into the camera and tells you your $5 latte is the reason you're not a millionaire. And for years, people nodded, felt guilty, skipped coffee for a week and stayed broke anyway, because in 2026, that advice isn't just outdated, it's actually dangerous. Let me be clear, your problem was never coffee. Your problem is that you don't understand leverage. You can save every lei for the next 10 years and still get crushed by inflation, rising costs, and a system designed to reward owners, not savers. Cutting expenses does not make you rich. It only makes you disciplined while staying poor. Here's the uncomfortable truth no billionaire on TV wants to say out loud. If you don't know how to deploy your first $100, saving $1,000 won't save you either. People love to focus on what they're wasting. Coffee, Netflix, Uber Eats, that's noise. Real wealth is built by people who know where money multiplies, not where money disappears. In 2026, the game has changed. Information moves faster. Opportunities are smaller but sharper. And the gap between people who understand money and people who just budget has never been wider. If you're still broke right now, it's not because you spend $5 on coffee. It's because your money has no job. It's sitting idle, watching inflation eat it alive, doing nothing. Ruthless investors don't ask, how do I save more? They ask, how do I turn a small amount into leverage? Because once you understand leverage, even $100 stops being small. $100 in the wrong place is nothing. $100 in the right place is a weapon. And here's what should scare you. Most people will never learn this. They'll keep clipping coupons, cutting lattes, feeling responsible, while never owning anything that actually produces cash. Meanwhile, the people who win aren't obsessed with frugality. They're obsessed with positioning, skills, distribution, systems, places where money flows and compounds fast. This year, the difference between staying broke and breaking out isn't luck. It's not discipline. It's not motivation. It's strategy. In this video, I'm going to show you exactly how ruthless thinkers approach their first $100 in 2026. Not theory. Not feel-good advice. A real framework for turning small capital into momentum. Because once you get momentum, the game changes for. If Kevin O'Leary isn't lying to you, but he's speaking from a position you're not in, that's where the danger starts. When a multi-millionaire tells you to stop spending, he's talking to people who already have excess capital. He's talking to someone with assets, income streams, and leverage already working in the background. When you hear that advice, you translate it into something else entirely: fear, scarcity, playing defense. And defense never makes you rich. Here's the mistake. Celebrity advice trains you to believe that wealth comes from restriction, that if you just tighten your grip hard enough, money will magically grow. But being cheap is not an investment strategy. It's a coping mechanism. Rich people don't win because they're better savers. They win because they're better deployers. Think about it. Kevin O'Leary doesn't get rich by skipping coffee. He gets rich by owning equity, buying cash-flowing assets, and placing capital where it multiplies. His savings advice is a side rule, not the game. But when someone with $100 hears don't spend, they do the worst possible thing, nothing. They put the money in a drawer, or a savings account, or a digital wallet earning nothing, and they feel smart for not touching it. Meanwhile, inflation quietly eats it alive. Let's talk numbers. In 2026, inflation doesn't need to be extreme to hurt you. A few percentage points over a year is enough to reduce your purchasing power. That $100 sitting in a jar today is worth less by December. You didn't lose it emotionally, but you lost it economically. That's the trap. Celebrity advice makes you believe safety equals progress. It doesn't. Safety without growth is decay. A scarcity mindset tells you to protect money. A wealth mindset tells you to assign money a job. If your money isn't working, it's dying. Slowly, invisibly, but guaranteed. The rich understand this instinctively. They don't ask, how do I avoid spending? They ask, where can this dollar earn its replacement? That's a completely different operating system. And here's the brutal part. Saving feels responsible, so people defend it. They confuse discipline with strategy. But discipline without direction is just stagnation. If your only move is don't spend, you've already lost, because the system doesn't reward people who hoard cash. It rewards people who deploy it intelligently, even in small amounts. So no, your $100 doesn't need a jar. It needs a mission. Because in this economy, money that sits still doesn't stay safe. It disappears quietly, while you're busy feeling proud for not touching it. The reason you're still poor has nothing to do with how hard you work. It has everything to do with how you think about money. The difference starts at the very first $100. Look at how most people use $100. They spend it to feel rich for a moment. New shoes, a dinner, a gadget, something that looks expensive today but is worth almost nothing tomorrow. 2 years later, that $100 purchase is sitting in a corner, outdated, worn out, or forgotten. The money is gone and nothing replaced it. That's not bad luck. That's a mindset. A poor mindset treats money as something to be consumed. Once it's spent, it's over. The transaction ends. The value only moves in one direction, out of your life. Now look at how rich thinkers approach the same $100. They don't ask, what can I buy? They ask, what can this buy me? Skills, access, tools, assets, something that sends money back in their direction. Maybe not today, maybe not tomorrow, but eventually the difference isn't the amount, it's the intention. $100 spent on shoes depreciates to 10. $100 spent on an asset, a skill, or a system has the potential to pay you back over and over again. That's not optimism, that's math. Poor people think money is for comfort. Rich people think money is for leverage, and here's where it gets uncomfortable. Most people are waiting for a raise, waiting for a better job, waiting for enough money to finally start investing or building something real. That waiting is the real reason you're stuck, because enough money never arrives. If you can't make $100 work, $1,000 won't save you. If you don't know how to deploy $100 intelligently, $10,000 will just disappear slower. Scale doesn't fix strategy. It exposes it. The system doesn't reward people who wait. It rewards people who start small, learn fast, and reinvest aggressively. Every wealthy person you admire understands this at a deep level. They didn't wake up rich. They learned how to turn small amounts into momentum. And momentum is everything. The biggest lie you've been told is that $100 is too small to matter. That belief keeps you passive. It keeps you consuming instead of building. It keeps you mentally rehearsing a future where you'll act someday. But someday is a fantasy. Action only happens now. That first $100 isn't about profit. It's about proving something to yourself. That you can turn money into something that works for you, instead of something that disappears. That you can think like an owner instead of a consumer. Once you make that shift, everything changes. You stop asking how much things cost and start asking what they return. You stop waiting for permission. You stop needing perfect conditions. Because the truth is brutal and simple. The gap between poor and rich doesn't start at millions. It starts at $100. And right now, the only thing standing between you and progress isn't lack of money. It's the decision to stop waiting and start deploying what you already have. Now we get practical. No motivation, no philosophy, just execution. This is the exact framework for how to deploy your first $100. In 2026, if you actually want momentum instead of excuses. Understand this first. This is not about getting rich off $100. Anyone selling you that fantasy is lying. This is about building a system where every future dollar you touch becomes smarter, sharper, and more dangerous. The first $100 is training capital. It teaches you how to think, how to allocate, and how to compound decisions. Here's the rule ruthless investors follow. Every dollar must have a job. If it doesn't produce stability, growth, or skill, it doesn't deserve to exist in your hands. So we split the $100 into 3 roles: defense, offense, intelligence. The first $40 goes into index funds or ETFs. This is your safe base. Not because it's exciting, but because it builds discipline and ownership. Funds like VO or VTI represent the productive backbone of the economy. You're buying fractional ownership in hundreds of real businesses that generate real profits. No guessing, no trading, no drama. This $40 teaches you patience. It teaches you that wealth is not built in days. It builds the habit of ownership. Every time you add money here in the future, you're reinforcing a system that compounds quietly while you sleep. And don't misunderstand this part. The purpose of this $40 is not massive returns. The purpose is psychological stability. When markets move, you learn to stay calm. When headlines scream, you learn to ignore noise. This is where you train yourself not to panic. People who skip this step end up reckless later. They chase hype because they never built a base. This base keeps you grounded while you take smarter risks elsewhere. Now, the next $30 goes into 2026 tech and AI. This is where growth lives. This is where asymmetry starts. You are not buying trends. You are buying infrastructure. Companies building chips, data pipelines, automation tools, AI models, robotics, and digital platforms that businesses rely on. You don't need full shares. Fractional ownership is enough. The point is exposure, not ego. You're aligning yourself with industries that are absorbing capital, talent, and attention at an accelerating rate. This $30 is offensive capital. You're accepting volatility in exchange for potential upside. Some of these companies will underperform. A few will dominate. That's how this works. The goal isn't to be right on everything. The goal is to be positioned where growth is inevitable over time. This also forces you to learn. When you own even a small piece of a company, you pay attention, you read, you understand earnings. You start thinking in terms of products, margins, and scalability. That knowledge compounds faster than money ever will. Now, the final $30 is the most important part. This is where most people completely fail. The last $30 goes into self-education. A book, a course, a specialized tool, something that directly increases your ability to earn. In 2026, the highest return on investment is not stocks. It's skills. Skills turn time into money. Skills give you leverage that markets cannot take away. This isn't about generic self-help. This is targeted. Writing, sales, coding, automation, AI tools, data analysis, marketing. Skills that businesses already pay for. One skill learned properly can return thousands of dollars over your lifetime. No stock guarantees that. No ETF promises that. This is why rich people obsess over learning, while poor people obsess over saving. That $30 book or tool isn't an expense, it's a multiplier. It increases the efficiency of every future dollar you touch. It sharpens your decision making. It raises your earnings ceiling. Here's the key insight most people miss. Investing in yourself is not separate from investing in markets. It's what allows you to invest better in markets. Knowledge reduces risk, skill increases opportunity. Now zoom out and look at what you've done with just $100. You've built a base that compounds steadily. You've positioned yourself in high growth sectors and you've increased your personal earning power. That's balance. That's strategy. Most people put all $100 into one thing and hope. That's gambling. This is structured. And now comes the most important rule, repetition. This blueprint is useless if you do it once and stop. The power comes from consistency. Every time you get another $100, you repeat the process. Adjust slightly as you learn, but keep the structure. Over time, that $40 base grows into real capital. That $30 growth bucket exposes you to breakthroughs. That $30 education stack turns you into someone who earns more faster. This is how small money turns into big money. Not overnight, not magically, but predictably. And let's kill one more excuse. You do not need perfect timing. You do not need market bottoms. You do not need permission. Waiting costs more than mistakes ever will. People who win aren't smarter. They're earlier and more consistent. If you delay because $100 feels too small, you're missing the point. This is not about the amount. This is about building the habit of deployment. Once you master that habit, scale becomes easy. You'll start seeing money differently. Instead of asking, can I afford this? You'll ask, Does this pay me back? That single question changes everything. And here's the brutal truth. The people who say this plan is boring are the same people who will still be stuck next year. Boring is good. Boring compounds. Chaos doesn't. This blueprint doesn't make you feel rich today. It makes you dangerous tomorrow. So if $100 is all you have, stop treating it like it's nothing. Treat it like the foundation of a system. Because once you build the system, money stops being the problem. The real risk isn't investing $100 and being wrong. The real risk is doing nothing and staying exactly where you are. And that's the one mistake you can't afford to repeat in 2026. Before you deploy another dollar in 2026, you need to hear this part clearly, because one bad purchase can undo months of discipline. This is the warning most people ignore, and it's exactly why they stay stuck. If you're trying to build wealth and you're still buying things that only make you look rich, you're sabotaging yourself. The first thing to avoid is fast fashion and hype clothing, limited drops, trendy sneakers, logo-heavy outfits that spike your ego for a week. The moment you swipe your card, these items lose almost all their value, 90%, instantly. 2 years later, they're worth nothing. No resale, no return, no leverage. You didn't buy clothing, you bought depreciation. Wealthy people understand this intuitively. They don't dress to impress strangers. They dress to stay comfortable while they build assets. Hype clothing trains you to associate spending with identity, and that's dangerous. Identity purchases keep you broke because they never pay you back. The second thing to avoid is new cars bought on debt. This is one of the most efficient wealth-destroying machines ever created. A brand new car drops in value the moment it leaves the dealership. Add interest on top, and you're paying extra money for something that's already losing worth every month. This is the interest trap. You borrow money to buy a depreciating asset, then work harder to pay for something that's worth less over time. That's not convenience. That's a financial leash. In 2026, flexibility is power. Debt removes flexibility. Every fixed payment reduces your ability to invest, learn, or take advantage of opportunities. Rich people don't avoid cars. They avoid bad math. And bad math is financing something that will never generate cash. The third thing to avoid is get-rich-quick crypto schemes, especially meme coins with no real utility. Let's be blunt. If a project has no product, no users, no revenue, and no purpose beyond going up, it's not an investment. It's a transfer of money from late buyers to early promoters. These schemes prey on impatience. They promise shortcuts because people are desperate to escape. But shortcuts without fundamentals always collapse. The winners aren't the believers. They're the creators and insiders who sell the story. Real crypto innovation is infrastructure, not jokes. If you don't understand what a token actually does, you're not early. You're exit liquidity. Here's the pattern tying all three together. They feel exciting. They feel urgent. They feel like progress. But they produce nothing. In 2026, you don't need more excitement. You need fewer leaks. Every dollar you protect from depreciation is a dollar you can deploy into something that compounds. Wealth isn't built by avoiding spending entirely. It's built by refusing to spend on things that can't pay you back. If it doesn't grow, earn, or teach you something valuable, don't buy it. 2026 is not going to reward the loudest people or the luckiest ones. It's going to reward the people who move early, think clearly, and act with intention. This is the year where the gap widens, not between rich and poor, but between those who deploy and those who wait. Most people will sit on the sidelines again. They'll keep listening to advice from billionaires who forgot what it feels like to start with nothing. They'll keep telling themselves they'll begin when conditions are perfect, when they have more money, more time, more confidence. And while they're waiting, the system keeps moving without them. You don't need more money to start. You need a decision. That first $100 isn't about the profit it makes this month. It's about the identity it builds. The moment you invest your first $100 intentionally, you stop being a spectator. You stop hoping. You start learning how money actually works in real time. Every smart investor you admire started exactly where you are now. Confused, skeptical, unsure, but willing to act anyway. They didn't wait for permission. They didn't wait for perfect timing. They started small and stayed consistent. 2026 is going to be the year of the smart investor, the person who understands that discipline beats hype, structure beats emotion, and systems beat shortcuts. If you build the habit now, you'll look back a year from today and realize this was the turning point. So here's the challenge. Take your first $100 this month and deploy it with intention. Build your base. Position for growth. Invest in your skill. Repeat. No excuses. No delays. No overthinking. If you're committing to investing your first $100 this month, comment start below. Lock it in publicly. Make it real. And if you want clear, grounded strategies for building wealth in 2026 without hype, without shortcuts, subscribe now. This channel exists for people who are done waiting and ready to build. Your future doesn't need motivation. It needs action.